We're joined by Jay Leupp, president of the Grubb Ellis AGA funds. Jay, thank you for joining us.
Great to be here, Alan.
Can you tell us what kind of opportunities are out there for income investors who are looking to invest in REITs?
Sure. Well, one of the three mutual funds that we manage is the Grubb Ellis AGA Realty Income Fund, which is a dividend fund for investors. We're looking for income opportunities. Right now, we're seeing tremendous opportunities in the REIT preferred market. This is a lesser known equity market from the REIT common stock market. It's about $25 billion in equity market capitalization, and it consists of over 150 issues of REIT preferred shares. We're seeing average dividend yields in the 8 to 10% range, which we believe are extremely safe, and we can deliver really high single-digit income returns to our investors. And as borrowing spreads tighten, we think we can also deliver some appreciation as well.
Okay. And what kind of appetite do you see for REITs among institutional investors possibly looking to get back into the space?
We see more opportunities for institutional investors to come back in. Given the fact that REITs are over 50% off of their highs of 2007, we think that institutional investors are looking at long-term, very attractive valuations. I think for institutional investors that are taking a long-term approach to public market real estate investing, right now is an excellent time to be making new investments in real estate investment trusts. We're doing that in our total return fund. That's the Grubb Ellis AGA U.S. Realty Fund, and we believe other institutional investors are doing that as well.
And what kind of lessons do you think that these big institutions learned from their experiences with opportunity funds during this downturn?
Well, many institutions that invested in opportunity funds are now paying the price for doing that. And I think some of the lessons are that opportunity funds tend to be very leveraged, they tend to have high fees, and they tend to be illiquid. And all three of those factors become problems in a market where liquidity becomes very important.
And what about the potential for continued joint ventures between REITs and these large institutions?
I think that there's going to be more joint ventures. REITs are still looking for different sources of liquidity. They can obviously access the public market, both the common and preferred market, as well as the debt markets. But several REITs are continuing to look at the potential for selling equity shares in their existing assets to joint venture investors. We think that joint venture investors will come both domestically in the form of large foundations and pension funds, but also this is where we see opportunities for global investors in joint ventures.
All right. Thanks for your time, Jay.
You're welcome.
For more information on this and other REIT news and analysis, check out REIT.com.